Hi folks, welcome to the next video, which tests you on your ability to put together a multi-step income statement. So we've got some balances for accounts on Ruby Corporation's financial statements at December 31st, 2019. So you can see these are taken from what we would call the adjusted trial balance because it says all adjusting entries have been made. All sales were on credit. Now, you'll notice in this question that, first of all, none of the accounts were telling you if they're debit or credit. We did tell you that they all have normal balances. So you're supposed to know that retained earnings is normally credit, sales discounts are normally debit, notes payable, a liability is normally credit, and so forth. You'll notice here, but because the question is asking you to put together a multi-step income statement, just for the purposes of the video, I've highlighted in yellow all of the accounts that would be included on your revenue or expense side in your multi-step income statement. The other thing I've done is I've highlighted in green the accounts that you would use in order to help you calculate your net sales figure. These highlights will not be given to you on the final exam. You're supposed to know. But just to help you through with the video, I've provided it. So now, we want you to calculate first net sales. And again, you're going to look to the items like sales revenue, sales discounts, and sales returns and allowances. And we know that we have sales revenue of $425,000. We have to deduct from that any sales returns and allowances. So these are items that have been returned by the buyer because they were incorrect, things we didn't order, or we decided that instead of sending them back, we would just take a credit for them or get a reduced price. That's an allowance. But in any case, the total sales returns and allowances were $7,000, and we also had a sales discount. We must have made an early payment, and that's $18,000. Those two amounts get deducted from sales revenue to give you net revenue of $400,000. Now we want you to prepare a multi-step income statement beginning with the number you calculated in Part 1, net sales. You remember when we discussed this, we said when you start your income statement with net sales, that means that you're doing it for the external users of your statements, not internal. If you were doing a statement for an income statement for internal purposes, you would show your discounts, you would show your returns and allowances. All right, but when you're doing it externally, we don't want to tip our hands to external competitors, marketing people or financial people, so that they can figure out what we're doing for returns and allowances and sales discounts. So in this case, we've asked you to start with net sales, just as you would if you were doing statements for external users of your statements. So now, notice you are going to need to remember on the exam to make sure you know how to do your three-line title, which is the who, the what, and the when. It's for a period, year ended December 31st. It's for Ruby Corporation, and you're doing an income statement. Don't forget, in the multi-step environment, you start with your net sales and deduct your cost of goods sold to calculate gross profit. You need to show gross profit. From the gross profit, then you start deducting all of your operating costs. In our case, we have advertising, insurance, depreciation, and wages. Our total operating costs that get deducted from gross profit gives us income from our basic operations of $46,000. It's from this number that we have to deduct and add in any other revenue and expense. And in our case, the other revenue and expense will be interest revenue and interest expense. Why is it other? Because these are not as a result of operating decisions made by the company. This has got more to do with how you decided to finance your business. Okay, so the idea is we're going to take any revenue and deduct expenses related to interest from it. And at net, you can see we have net revenues of $10,000. Because it's a net revenue, we're going to add it to our income from operations to get income before income tax expense of $56,000. If we had expenses bigger than revenues, then we would deduct it, and we'd have a number which is less than our income from operations. Now, We have income tax expense. Just like individuals, corporations have to record income tax expense. In our case, we gave you the income tax expense. You can see it highlighted in yellow here, and it is 16,800, right? Yes. So our net income is going to have our net income before income tax expense less income tax expense, which is going to give us 39,200. Now, the other thing we ask you to do here is to give us the total dollar value of shareholders' equity. So now, to calculate the total dollar value of shareholders' equity, you had to remember that shareholders' equity has two pieces. It has contributed capital and retained earnings. But don't forget, you only had in your trial balance, you only had retained earnings at the beginning of the year. You had to remember what we talked about in the earlier part of the course, and starting again with adjusting entries, because we redid all the statements for adjustments, how you go from opening to ending retained earnings. So remember how you did the statement of retained earnings. You started with your opening retained earnings, you added net income, and you deducted any dividends declared. Well, we can see here we have our opening balance of retained earnings. We already calculated our net income. We did our multi-step income statement. We don't in this example have any dividends declared, but if we did, we would deduct them, but we don't. So in our case, if we have to calculate, as we do, the ending balance of shareholders' equity, we want the balance in contributed capital and retained earnings at the end of December. Well, there were no new shares issued, so we're going to take our contributed capital right from the trial balance that we were given in the question, which was $45,000, and we're going to add in our retained earnings at the end of December 2019. But we will have to calculate this number. So we look at our retained earnings to start, which we were given in the trial balance was $99,000. To that we're going to add our net income, which we calculated as $39,200, and because we didn't have any dividends that were declared, that's zero. So our ending balance of retained earnings at the end of December 2019 is $138,200. When we add that to $45,000, we get shareholders' equity in the balance sheet at December 31st, 2019 of $183,200. Now I've also asked you to calculate for us the net book value of the building. So we're going to take the building at cost less accumulated depreciation. These items are in your trial balance. So where are they? Well, you're going to look at your building. We've got the accumulated depreciation on the building. We'll just highlight that in another color. Maybe we'll do a little fluorescent purple here. And we've also got our building here at $290. All right. So if we go down here, we've got, oh, that should have been $290, was it, or $280? Let me see. Oh, no, $280. I got $280 here. That's good. So now I've got $280 less $49,000. So that's my building at cost. Building at cost here, right? Building at cost less accumulated depreciation. And that is, we'll do that in bright blue, right? It's my accumulated depreciation. So that's going to give me my building at its net book value of $231,000. Okay, now we wanted you to find out the dollar value of current liabilities by using the adjusted trial balance. So what you needed to do is go back up here and figure out which accounts are current liabilities. Well, there's a current liability for you right here. That guy there is current, right? This guy here is current. Salaries payable, right? Now your notes payable aren't due until 2025. You're sitting here in 2019. That's a non-current liability, so you're not going to use that in your calculation. But don't forget, unearned amounts, cash you've taken in advance that you haven't provided services for, that's an unearned liability. That's a liability because it represents unearned revenue. So these three amounts are going to be used in your calculation of current liabilities. So we've got $73,000 here. So that's your current liability. Now, what's the gross profit percentage? So now you can see we're pulling in another chapter. Okay, we're pulling in some other stuff that we talked about in the chapter where we talked about the multi-step income statement, and we're going to calculate the gross profit percentage. Well, you know it's gross profit divided by net sales. We will give you this formula on the exam. You don't have to memorize it, but you'll have to know how to calculate it or what numbers to pull, given that we're going to give you the formula on the exam. So gross profit divided by net sales, well, you just calculated your net sales for us in part 1 of the question, and when you did the multi-step income statement, you calculated gross profit. We had gross profit of $120,000, so we'll go back here. There it is right there, all right? And you also had net sales, okay, of $400,000. We'll go back here. We put it in there, and we also calculated it up here, right? So 120,000 divided by 40,000 gives us 30% because we said we wanted a percentage. All that tells us, now we didn't ask you to interpret it, but all that tells us, if you're interested, is that for every dollar in net sales that you generate, how much do we keep after covering our cost of goods sold? That's the percentage of net sales that we keep. And that's important because we're going to deduct all of our operating costs from that. So if we're not making enough gross profit, we're not going to have enough money to pay our bills, our rent, our employees, and all those other things that we need to run our business. Okay? So this concludes our video for Chapter 2, Preparing a Multi-Step Income Statement, with some other questions that you can answer related to that question. I hope you found the video helpful.